Hey, welcome to the New Home Insights podcast by John Burns Real Estate Consulting. I'm Dean Worley, your host. Each episode, we're going to bring you some of the best minds in the housing business talking about some fascinating topics or trend or innovation or issue, just like the one you're about to listen to. Enjoy. Welcome to New Home Insights, the John Burns Real Estate Consulting podcast about all things U.S. housing market. I'm your host, Dean Worley. Today, we're going to again explore the world of build for rent, BFR. Today, though, we're going to do that with Branden Lombardi. He's the president of BB Living, one of the largest BFR operators in the world, I think you could say. We have a range of topics to cover, but really we're going to delve in pretty deeply with just sort of BFR as a real estate asset class and how that teases out. So how are you doing, Branden?
I'm doing well. Thanks for having me on today, Dean. I appreciate it.
Our pleasure, and thanks for coming on. So I'll let you tell us about BB Living, but let's start with kind of just some background on you before we get to the background on BB Living.
Sure. Well, as far as the real estate industry is concerned, I've been in the business for just about 20 years now. Started back on the land brokerage side, which was a great learning experience. I worked for Land Advisors Organization for Greg Vogel back in the day, and learned pretty quickly how the bill of goods I was sold that land brokers do half the work and make twice the money wasn't quite true, but no.
Greg,
In all seriousness,
Greg told you that?
No, Greg did not tell me that. Somebody else told me that, and that's what led me to Greg. But
gotcha.
Yeah, no. Obviously, it was a great place to kind of learn the business, starting kind of pre-run up in Phoenix in 2004, 2005, and 2006. Like that was an exciting time. At the same time, a monkey could pick up a phone and make a phone call and sell a piece of land, right? So obviously the downturn was a real learning experience going through that whole process. And so, in 2011, after making kind of all the way down and at least starting to see some glimmers of light, I decided I didn't want to be a broker. I liked being more in the mix. I wanted to be more of a principal and have a little bit more of the control, you'd say. And so I, started working on deals on my own and looking at various things, and actually was at the Beazer Pre-Owned Homes REIT, which was one of the first SFR REITs, kind of late 2011, early 2012. I thought it was a really intriguing opportunity to invest in the housing market in kind of a different and unique way. Obviously, the scale was tremendous. And that was a real learning experience for me, just kind of understanding the single family rental market. And then I'd had a long time relationship with one of my now partners and one of the co-founders of BB Living, Daryl Berger. And kind of long story short, we started working together. They had finished the first build to rent project that they had done, Higley Park, and started working together on some additional deals here in Phoenix. And, it's been kind of off to the races ever since. Build to rent, early on, we were certainly truly pioneers in the space. There was a few others in Phoenix. This has kind of been the birthplace for kind of the build to rent movement, and that's been really exciting to be a part of. And we formed a partnership with Toll Brothers back in 2019 to expand the business beyond Phoenix, and we're now nationwide in a number of markets and continue to look to grow and add new markets. And obviously, through COVID, it was a trying time to continue to try to grow a platform nationally. But we've worked really hard, and I'm really proud of the portfolio of communities that we're developing right now and what we're looking to deliver in the next couple of years. And obviously now the attention is kind of fully on this asset class and this business, and that certainly kind of brings a new challenge to our work on a daily basis. But that's kind of my experience in a nutshell. Seeing the ups and the downs. I certainly think that my experience early on in the business colors my viewpoint on the world and what we do or don't do here at BB Living from an investment standpoint. And, I also have great partners and colleagues that, started this business, and we continue to operate it together. And, as a team, we've, I think, made some pretty good kind of, sound decisions that will set us up to be around for another decade plus moving forward, even if kind of the surge of activity and build to rent it only lasts for a few years. We think there's real staying power in this business, and we're excited to keep building BB Living.
Definitely. Now, speaking of what colors, how your outlook on well your work and your life, can we just
Yeah.
touch on a little bit your kind of your personal story? You are a fairly young cancer survivor, and that's really colored your outlook as much as anything can stamp it.
Yeah,
I
sure. So
imagine.
I was diagnosed with bone cancer at the age of 17. So my senior year in high school, the second half of my senior year, I spent 15 of 80 days in school and the other 65 in the hospital. So wasn't really the way that I had kind of seen my senior year of high school playing out. And, unfortunately, it wasn't just a 6-month thing. It kind of turned into a 3+ year battle of lots of surgeries and chemotherapy and ultimately a stem cell transplant. But, kind of taking the long view, I just celebrated 20 years from my stem cell transplant in October, and 20 years clear of kind of the last of the cancer that had, originally spread to my leg and then to my lungs multiple times. And so, after, 25 surgeries, my initial diagnosis and 5 recurrences, 3 years of chemo and that stem cell transplant, it all feels so far away. But it certainly is with me, both like physically and just kind of emotionally, like you said, kind of coloring my outlook. I think that has always helped me in the business, be a bit more optimistic, even in the kind of worst of times and in worst of environments. There's always a way to kind of say, well, it could always be worse, right? And so sometimes that maybe comes across as a little flippant, but I think that does help me kind of weather the storm, kind of in my professional life and my personal life.
God, that would be awkward if you said it could be worse and someone sort of teased you about that and say, well, let me explain. That would be
exactly.
well,
Exactly.
that is a pretty inspiring story,
Thank
Branden.
you.
Thank you for sharing it,
Yeah, of
that.
course.
That's that would, I mean, you either embrace it and fight it, or you succumb to it and you fought it. I mean, I don't get me wrong. I obviously that ends badly for a lot of people who are fighting it with all their might, but it's an amazing that you're able to get through it.
Well, there's certainly like that element of like dumb luck, and then also I think like being 17 when I was diagnosed, I just didn't know any better, right? Like I had grand plans for my life, and I wasn't going to become a statistic. That was my mindset, however well informed or uninformed that frankly was. I just I didn't know. I didn't know what the expectations were. Frankly, my family and my doctors, I think, tried to shield me from kind of the more grim side of the reality. If it wasn't until I was almost done with my stem cell transplant that I even knew like what stage my initial diagnosis was at. Nobody had ever told me, and frankly, I didn't care enough to ask. I was just focused on getting back to the life that I had sort of lived when I was in and out of college, going back and forth between treatment. And focused on that aspect of my life as opposed to what was it, stage 1, 2, 4, whatever it was.
Yeah.
Frankly, it didn't really matter. I mean, I knew it was bad. I just didn't ever know until after the fact, kind of how dire the situation was. And that's one of those things. Even 20 years later, there's a little bit of that kind of, oh yeah, that was not great. But no, feel healthy. I've never felt better. I think that's kind of the exciting part and what we're doing here. And from a business standpoint, being energized. I have a great family. I have a great wife. I have a 13-year-old and a 4-year-old that keep me busy. And so, wow, that all of that stuff are good things and motivate me in the right way. So.
Okay, you look 29, just FYI. So stop talking about 13-year-old kids. Well, anyway, thank God for science with 5 stem cell things, and then thank God you're still here to talk to us.
Yeah.
Now
definitely.
For the awkward transition into the business at hand,
yes.
Which is let's start talking about BFR really kind of as an asset class.
Sure.
So to start, for instance, do you see your BB Living operating more like a developer and operator of apartments, or a little bit more like a for sale, like just a builder?
Well, so I think it's a very interesting question and topic. I think one, build to rent as an asset class describes a broad range of both product and investment theses, right? You have a ton of players all doing a little bit of a different thing. And so to your question about, are we more like a for sale builder or more like an apartment developer? My answer is it depends. What part of the process are you talking about? We look to acquire land more typically like maybe a multifamily developer buying a 20 or 25 acre site that we then plan kind of on a self-contained basis, as opposed to a kind of more typical conventional subdivision. That's what we do here at BB Living. From the product standpoint, BB Living is much more conventional, right? We only build 3 and 4 bedroom homes, All of our homes have attached 2-car garages. The product ranges, our smallest product series, the smallest floor plan is, 1,500 square feet, and our largest is, 2,500 square feet. But our average product, whether it's our attached townhomes or detached single family homes, are somewhere in that 1,800 to 2,000 square foot range, right? So that's the kind of the area that we focused on is, early on when Matt, Sam, and Daryl started BB Living and started the Higley Park community, those were all 3 and 4 bedroom homes. They had built a bit of a scattered single family rental portfolio and clearly seen the demand for more of a conventional housing product from the market that was not being met by apartments, right? And frankly, wasn't really being met by the one-off mom and pop landlords.
No.
And so that's the tack that we've taken. Again, build to rent encompasses so much from a product standpoint. You've got the horizontal apartment guys on the one end, right? They're building very similar floor plans to apartments, 600 square foot 1 bedrooms, 900 square foot 2 bedrooms. And where there are three bedroom plans, let's call it 1,200 square feet. But those are still really, I kind of view that much more like multifamily, right? It's just less dense. It's, single level living. There's a real value there. The market has taken to it very well. And then again, on kind of the extreme end of the spectrum, there's more of the BB Living product, which is much more conventional, comparable to the for sale product that home builders are building and selling on a daily basis.
Would you ever do that kind of horizontal apartments or something really, really dense?
That's not our MO, at least for today. Now we have gotten more dense on attached product in certain locations. We have an infill project in Centennial, Colorado that is, about 15 to the acre, a 3-story townhome product. And we're always looking to iterate and make sure whatever product we build is really going to meet the market. That's the biggest thing we want to ensure of, right? Is like wherever we're building, our default is always to build more of that conventional detached single family home, albeit at a slightly higher density than the for sale builders. That's how we can compete for land. But we want people to have that single family home experience. But in certain markets and in certain locations, infill locations, there are markets across the country where attached townhomes are just much more widely accepted. And so we kind of look to find our spot in each location and within the market and deliver the right product. So, we'll go dense. We just won't go to that horizontal apartment product, which frankly isn't that dense, right? It's 12 to 14 to the acre, because at some point it makes more sense just to go vertical, right? And build a more typical garden style apartment or, mid-rise or something like that. And that's just not our business plan.
Speaking of density, that's actually a great segue. You hear a lot about BFR developers being able to outbid their competitors for land. You also hear a lot about that has to do a lot with density. Is there more nuance, I guess, to that reason for the outbid?
I mean, my personal opinion is, it's not purely just density, right? Because when you're building at, let's call it 10 to the acre, your per unit price may be coming down, and that may allow your residual to go up, right? Because if you're paying $40,000 a door for 10 units per acre, it's $400 an acre versus paying, 50 a door for 5 to the acre, right? There's a pretty big delta there in the land residual. But I also think the other part of it is, again, they're in kind of these early stages of the asset class, you're seeing some of those different strategies develop. There are some groups that are going to build and, look to exit as quickly as possible, right? Much more of that merchant build scenario, right? So they're going to look for that development spread that, gives them comfort that all the risks they're taking will be rewarded. But then you have others that they're going to build these homes and add them to an existing rental housing portfolio where they never have to exit. Right. So the groups that are doing that, they're looking at buying land. They're going to build, 100, 200, 250, 300, whatever number of homes. It could be 10 homes, but they're not looking at it as a community necessarily on a standalone basis. And they're not looking to exit and ensure that they achieve certain return metrics. They're looking at saying, hey, I just added 10 brand new homes to my portfolio, or 100 brand new homes to my portfolio in Metro Phoenix or Metro Dallas. I never have to exit. I can get much more aggressive on my land price because my yield on those homes can be much lower, right? Yeah. And so I think that's also clouding the picture a bit when it comes to land price and what and who is willing to pay certain prices.
So to make sure I understand that well enough, so that the buyer who has a little bit shorter time horizon is not going to be as willing to pay that top dollar as the longer hold time horizon folks.
Correct. Yeah. There's investors out there doing build to rent that, like I said, they never plan to sell the home, right? And that gives you a whole lot more leverage when it comes to the land price and frankly, the cost basis you're willing to take on for the home versus somebody like BB Living. We're looking to achieve a pretty typical developer spread. We would love to own all of these forever, but that's not, our current business plan. In some locations, maybe it will be. We have the flexibility and the latitude to kind of figure that out as we go. But we've certainly transacted in a number of instances and been rewarded for the hard work that we've done. And we think that will continue to be the case. But that also makes us maybe a little bit less aggressive than some of those other groups out there.
Haven't a lot of the actors, though, gravitated to that buy and hold longer term strategy? Because remember when BFR first became a thing, a lot of the folks were just sort of pessimistic or at least suspicious about it. And one of the reasons for that was, they're just going to dump all this stuff when the market recovers. It's 2012 or 13 and the market was still not perfect. Have most of the BFR operators migrated to a little bit longer horizon?
Well, I think maybe then we're getting into like another segment, which is more of like single family rental, right? And we could bucket all of this up and call it rental housing. My colleague Matt Blank talks about, kind of the merging of single family rental, build to rent, and multifamily into just a broader kind of rental housing asset class, which I think is where we are trending ultimately here. Okay. But the single family rental players, the Invitation Homes, American Homes for Rent, Progress, all of those groups that do have that bigger portfolio, the broader time horizon as far as the investment is concerned. Certain groups are making inroads into build to rent and aren't looking for that exit. So I think there is certainly the group of those, and there's some larger investors. The capital markets are definitely trying to take advantage of this space and looking at it with a longer term horizon. I think there is still probably a dearth of operators that can effectively go through the entitlement, development, construction, lease up part of it, and then ultimately exit. I think some people are, frankly, just trying to take advantage of the demand that currently exists, and for good reason. It's a great business. We believe in it. But I think you're going to see a continued kind of settling where, the capital that is chasing, we'll just call it, rental housing in general, looks at build to rent and is willing to pay a premium for more of the stabilized communities, as opposed to backing operators to develop it out. And there's going to be a balance, of course, but I think that's where ultimately the kind of bigger pot of money will settle is that, hey, I'm just going to buy this stuff when it's finished and stabilized, and I'm going to operate it no different than I operate the rest of my multifamily housing portfolio across the country.
You may have just partially answered this, but my next question is going to be about BFR is just a hugely attractive investment right now to the capital class. Tease that out a little bit. Why is it so sexy to those folks right now?
Yeah, I think it's a couple of things, right? One, you go back to the last major recession, and the foreclosure crisis really created this opportunity that had not previously existed to buy single family homes in the United States at scale, right? So that's always a really attractive asset class to get into. And this was a new and a different way to do that. And now build to rent comes, it's not taking away from the existing housing stock from a for sale perspective. It's adding, we're segmenting. There's a bunch of different products being built in a variety of locations. And so you can kind of meet the market at different levels, from a rent rate perspective or a location perspective. And so I think, part of that is just being able to, again, offer something new and different to the consumer that they frankly didn't really know existed, right? The default, if you're going to rent something, 10 plus years ago, the default was an apartment, right? And frankly, that still is the default from a kind of scale perspective. But now there's this growing opportunity for people that, hey, I don't want to squeeze my family when we're moving from San Francisco to Dallas. I don't want to squeeze into a 3-bedroom apartment. I can go rent a 3 or 4 bedroom home in one of these build to rent communities. Hopefully it's a BB Living community, have a really different experience and be much more kind of circumspect and thoughtful about where I ultimately end up buying a home. Because I don't think the overall pattern of people wanting to buy and own a home is going to change. We're not in the business of trying to materially change the U.S. consumer's mindset. We're offering an alternative, right? And that can fit for a number of people. We may have people that stay with us for a decade in our communities or rent in perpetuity because they like that and the flexibility it gives them. But we know certainly there's a lot of people that are renting from us in kind of that try before you buy methodology, right? They're going to rent a home in a certain community and there's, 5 or 10 or 24 sale options in the surrounding area. They're going to, pick, and that's why we're so focused on location. We kind of stumbled into the master plan communities from a location standpoint, but realized that, hey, They're well amenitized. They're typically in really good locations. The other for sale builders in the community are generating activity and traffic, and they kind of already qualified the location. Build to rent in a master plan really kind of is another segment, right? It provides additional segmentation, and we saw it at Vistancia out in Peoria, we saw it at Verado, we see it at Eastmark, across the country. Where that try before you buy. Somebody comes in, they're going to rent from us for a year or so, and then ultimately buy a home in the community because they've gotten ingrained into the community culture. Their kids are going to the schools, and that's a new option that didn't necessarily exist from more of an institutional kind of scale and perspective. They could always go rent a one-off home, but that comes with its own issues and problems. And so now you see this new product being developed, and so I think that again that opportunity to give the market something that they maybe didn't even know they wanted, and now they have the opportunity to get it. I think that's a big part of it. I think COVID has had a huge impact from the standpoint that people don't feel necessarily the pull to be in like the urban core or as close to their jobs, and they're willing to trade, maybe a longer commute because they're only having to do it a couple of days a week for more space, right? And so again, a 1,200 square foot apartment versus a 2,000 square foot home with just a little bit of a backyard is seen as an upgrade, right? And that just gives people more optionality and flexibility. And I think that has really been a catalyst over the last year for kind of the growing interest in the asset class.
What you said about master plans a minute ago is amazingly true. And I know that's a thing now. I know it's happening in a lot of places now, but I'm shocked that it's not in really any master plan with at least 5 or 6 product types, neighborhoods should have one of those at BMR. Almost rotely. It should just be as part of the norm.
I think you will see that as the norm moving forward. I mean, again, it took some convincing, and there are some developers that we are truly grateful to for taking a chance on BB Living early on. But whether here in Phoenix or in other markets when we were, expanding. But in our kind of initial portfolio of 3,400 homes, 85% of those are in master plan communities, and that's really been a strategy that we've employed. Now, standalone communities work just as well, where we just go buy 20 or 25 acres in a well-located submarket, build the amenities, build the infrastructure, and operate more on like a multifamily community, just the product being different. But yeah, I think the master plans are all starting to incorporate this. I think there's still some iterating and learning. It doesn't need to be in with the mixed use. It can be part of the residential. It can be integrated in the community. You can have your own amenities. You can give access to the rest of it, and that all just kind of depends on the specifics of the deal and the location. And we've kind of done it all ways at this point, and I'm really excited about that because I think it's a great fit for the kind of master plan concept to have another segment that is not just apartments and is not just for sale housing.
Yeah, it really is win-win. And there still is, I can tell you, we do a lot of master plan studies, and there's still very often that leeriness. They think of it like apartments, or they think, like you said, they want to locate it in a place where now that's not where you need to do it.
Yeah.
You mentioned SFR a minute ago as well. Is it true that BFRs are a little easier for, again, the investors to understand because they're a little more like traditional multifamily than SFR is?
Yeah, for sure. So, excuse me, over the last couple of years, when we have decided to sell one of our BB Living communities, the first handful, we didn't really broadly market them or go through that process, and sold them to some of the single family rental REITs. And that was all well and good because that seemed like kind of the natural buyer for BB Living. We sold one of our communities earlier this summer, ultimately was bought by a single family REIT. But we're starting to see a lot more engagement from multifamily investors in the asset class. I mean, from the biggest institutional multifamily investors to high net worth individuals that have, been buying apartments for the last several years across the country, really kind of coming into the space, because that's what it does, right? It takes kind of the concept and the attractiveness of scattered single family rental, and it brings it down from a scale standpoint to one location. It's a little bit easier to operate. It provides scale. And again, you can operate it, very akin to a multifamily project. It's just a neighborhood of homes as opposed to an apartment complex.
I imagine it's just easier for them to get their head around it because it's something they understand, and SFR is a little more new.
Yeah.
What are the, investment metrics or the criteria that you look at when you're at BB Living, when you're allocating your resources, or you're looking at a market, or you're looking at a specific deal? Is there
Yeah.
something that you really, really focus on?
Well, so, again, at BB Living with our product, the all 3 and 4 bedroom product and more of that conventional product, one of the things that we've seen is a really strong demographic. And again, I think that goes back to our very first community. In the very first few communities that we did, whether in a master plan community or not, we were looking for really well located land, really good school districts, right? Like our demographic, 39 years old, 2 working adults, 1 child, half a pet, average household income of about $140,000, right? And that demographic, it mirrors a for sale demographic. And again, going back to it, we think, we know a lot of our residents are either selling a home and transitioning with us for a period of time, or they're going to be buying a new home. And so they're using it as kind of a waypoint. And then we have people where frankly, the economics are such that they may make really good household incomes, but they don't have the down payment, especially in some of the areas we're building, where with housing prices being where they're at today, the economics to buy a home and afford that down payment, that's really the obstacle for people, right? So now they can rent from us. They're paying, a similar monthly payment from a rent perspective as they would for the mortgage, but they didn't have to come out of pocket 5, 10, 20%, along with all the, kind of iterant closing costs and so forth. And that's really where the economic benefit to BB Living or build to rent is that upfront cost is so much lower, and you're getting a quality product. And especially in the BB Living communities, we're very focused on resident experience, the location, the school districts that we build within. And so those are really the key metrics, right? Like, it's I guess the best way to describe it is, we are definitely trending towards being more like the Toll Brothers of the build to rent asset class, right? That's the BB Living kind of philosophy. It helps that they're our partner, but they talk a lot about being at Main and Main, right? We want our communities to be in the best locations possible across the country and offer an alternative housing experience for people from a for rent perspective that is attractive, right? And so, higher barrier to entry locations are certainly where we're focusing, but you see it across the spectrum. There's build to rent going up across the country. There's a extreme shortage of housing supply, and so I think at least for the near term, like all of these locations give people options, and I think that's another kind of attractive part about this. But I think that's something that we're very focused on, is kind of maintaining the quality of our locations and focusing on those school districts, demographics. Proximity to employment and transportation. Just, it's not rocket science, right? Like real estate, the cliche is location, location, location. And we take that to heart every day here at BB Living.
That was a great answer and a very encompassing answer, but you had me at half a pet.
Half a pet. Yeah. That's my favorite stat. I don't know how it works out. And I always say it's the good half, right? So
I'm just glad to hear it's a stat. That's the key.
Yeah.
It's just a stat, people.
I think it's important because I think that's one of the things, right? An apartment doesn't necessarily lend itself as well to pet owners. We have far less restrictions when it comes to pets. We have the yards in almost every instance. We always try to add private outdoor space for pets and people to enjoy. But yeah, I like the half a pet stat.
Yeah.
So.
You mentioned let's get into motivation a little bit before we circle back. Sure. Is that you mentioned upfront cost or big motivation for your renters, maybe not having the down payment. I mean, what are the key pushes into BFR for you at BB Living?
As far as like the consumer's concerned?
Yeah, exactly. The renter consumer, what are they, why are they there besides the upfront cost that you mentioned a minute ago?
Well, I think like the opportunity to rent a new home, right? And again, we're very focused on creating community. We did some resident surveys a while back. And one of the things that we, I think, always anecdotally thought was true was like, hey, designing a community matters, how it lives and breathes and looks and feels and who's there. That matters. But that was actually proven out in the responses from our residents. One of the things, we'll kind of use the master plan example, but building on a parcel, kind of a somewhat self-contained subdivision. What I mean by that is just simply, we're building 150 homes in one location. They're not scattered throughout the master plan, but having a BB Living community in a master plan, the residents like that their neighbors are in a similar situation, that there are renters. There's not that kind of push and pull between homeowner versus renter. Oh, that, my neighbor, rents out their home and I own my home, and some of the conflict that can come from that. It's unfortunate, but there still is a bit of a stigma associated with renting, right? We deal with it on a daily basis, whether educating municipalities about who we are and what we do, to residents in existing communities where we're buying a piece of land and, coming in and, they have questions and concerns. But, frankly, again, our demographics are no different. Our cost of rentership, let's call it, is at a point where it meets or exceeds the cost that many existing homeowners pay on a monthly basis for their mortgage. Again, just removing that down payment. But I think the attractiveness of the locations is critical for BB Living. I think, again, the economic part of it can't be overlooked, but, new product. I mean, again, I don't know what the stats would be about how many people ever own a new home in their lifetime, like a truly new, brand new home. I've never owned a new home. I continually buy older homes, which is, I think, a personal fault. But that opportunity to live in a new home in a new community, the first one in or the second one in, I think that's pretty attractive to people. And again, it's an alternative product to what they typically maybe thought that was available to them if they were not going to go buy a home.
A factor I don't hear a lot, but I think is important, tell me if I'm crazy, is the low maintenance opportunity in the literal sense, not the lock and go sense, but in the sense that if your garage door breaks, you just call someone as opposed to have to fix it yourself.
Well, that's a tremendous point because, a few years ago, like one of the groups did a study and tried to kind of quantify what the cost of homeownership was from like an ongoing maintenance perspective. And it came out to, on a monthly basis, if you did it over, the life of a 30-year mortgage that you would have on your house, it was like some tremendous cost. Right now that included you have to update your HVAC system or, replace carpet or flooring and all those things. Yeah. But yeah, when somebody rents from BB Living, one of our residents said it, I put my head on the pillow at night and I don't have to worry about anything else. We'll change light bulbs, air filters, or maintaining the landscaping. So all of that stuff is done for you. When somebody moves out, the home is, turned and reconditioned. So it feels just as new as it did the first time. And I think that is a tremendous aspect that, probably does get a bit overlooked, is that, you really can focus on other aspects of your life, right? Our slogan of simply live more. We want our residents to focus on the things that bring them joy day in and day out, as opposed to fixing the garage door or, having a, sink that doesn't work or whatever. All of that's taken care of. And that's a big part of our strategy and our kind of resident experience, is making sure that the management and the maintenance of the communities is at a very high level.
Yeah, because I think plumbing does not bring joy to really anyone, I'm assuming. Certainly not me. Let's talk about now BFR, kind of the future and kind of how this sort of plays out. Let's start with how the market is right now is for the rental sector as a whole is just tremendous. I mean, I think RealPage just came out with their latest third quarter stats, and is nationwide is about a 2.8% vacancy rate, just a hugely landlord's market. Do you see rents? Do you think we're in for some pretty significant rental increases here over at least the short term?
I mean, for sure, right? I mean, supply is still at such a premium. I don't know that changes. I don't know that we can expect some of the rent growth we've seen in the last, 12 or 18 months. I mean, we've seen 20, 30, 40% lease over lease increases in rents. And I don't know this believe that's sustainable. It's certainly not how we underwrite. But, supply is still at such a premium. And frankly, it's not getting any easier to build a home or an apartment, for that matter, with all the supply chain and labor constraints that we have in the broader kind of construction industry. So I do see rents continuing to increase for the foreseeable future. Some of that may just be forced on the market by the fact that we're buying more expensive land, building a more expensive home. And so to achieve the same economic results, rents have to be higher. We'll see how well the market tolerates that, right? But I think that there's definitely going to be continued upward pricing pressure on rents until we get to more of a normalized supply and demand balance in the market, which, again, is really a market by market thing. But here in Phoenix, when you have, 8,000 active listings on the resale market, we're trying to do 30,000, new homes, 35,000 new homes, another 10,000 apartments, but we're barely, meeting the existing demand. Forget the fact that we've been under building for a decade. And that's a similar story throughout, much of the country where the population growth seems to be occurring most rapidly. And that's the locations that we're in, right? We're in Phoenix, Denver, Boise, Dallas, Austin, Southwest Florida. All those places have some type of constraints from a material or labor standpoint that is making home building incredibly difficult these days. And I think that tamps down that supply and will continue to, drive up both housing prices and rental rates for the foreseeable future.
What do you think the longer term trend? I mean, is BFR, I've heard some people talk about a 5 to 7 year runway here. I mean,
Yeah.
are you optimistic in that sense as well for BFR?
Yeah, for sure. I think we definitely have a longer term outlook. I mean, we're going to build a whole lot of houses in the next, 5 to 7 years. That's just what we have kind of on the board today. Never mind what we continue to acquire and plan for over the next couple of years. But yeah, again, we view this as a long-term business. We're very bullish on the opportunity. We're going to remain very disciplined though. And I think kind of to your question, I think build to rent will continue to kind of segment out and kind of, get away from being this catch-all. There's going to be the horizontal apartment product, which really folds in with multifamily. There's going to be different build to rent strategies that serve different price points in the market. Like, not everybody drives around in a Honda or a Toyota. There's a reason there's 50 million different car companies out there, right? And the same thing with housing. We don't look at for sale housing and just say, oh, it's all the same, right? You have entry level, first move up, luxury, whatever the different segments are. I think build to rent will kind of naturally mirror that, kind of driven by the location and the product where it's being delivered.
Okay. How about mortgage rates? That's all, or interest rates, I guess I should say, really. Well, kind of both, though. Are you worried about the finance or the investment appeal of BFR if interest rates continue to climb? Could that just detract from the attractiveness as BFR as an investment vehicle?
Well, so if you think about it, right, like single family rental and build to rent in the very early days worked because we were buying finished lots below replacement costs. We were building a new home for less than the cost of an existing home. And it was really viewed as like kind of this, kind of recessionary opportunity, right? And then, we over the last, several years kind of proved it worked in a more normalized market. And now it's working in a really hot market too, from a for sale perspective. And so then kind of looking forward, it's like, it's not a silver bullet for, whatever condition the market's in. But if you look at it, if interest rates go up and that takes more people out of the for sale housing market, they still need a place to live. So maybe our rental rates don't grow quite as fast or they're not quite as high. If it's more like a stagflationary environment as opposed to a truly inflationary environment, but people still need a place to live and people may make the decision, I'm going to rent as opposed to buy and wait to kind of see what happens with the market if interest rates go up. At the same time, that certainly has impact on cap rates. We've seen tremendous compression in build to rent from a cap rate perspective, where it used to be, okay, well, maybe it's 50 or 75 basis points above Class A multifamily to now it's tight with multifamily as far as cap rates are concerned when these assets go to trade on a cap rate basis. Mm-hmm. Could there be some cap rate expansion from where we're at today? Yes, but we never thought it would be, at the levels it's at from a cap rate perspective today. And I think it still makes it an incredibly attractive asset class moving forward, even if there is increases in definitely if there's increases in mortgage rates, especially with housing prices being where they're at. I just see that naturally leading more people to decide, at least I'm going to make a short-term decision and rent for a year or two or three, wait to see where the market kind of settles. And then also, if housing appreciation continues to run, that's just going to price more people out of the market that way as well. And more people will naturally kind of fall into, looking to rent, but not wanting to be in an apartment necessarily. So I feel pretty good about where we're positioned in the market. And I feel like we're certainly keeping our eye on things like interest rates and that cap rate potential expansion going the other way and away from us. But I think we're in pretty good shape for like you said, for the foreseeable future, at least from the kind of attractiveness of the investment.
Yeah. So you actually just answered my next question, which is from a mortgage rate perspective, it actually could push some demand toward you.
Yeah.
So that could enhance there. But from a cap rate perspective, I guess what you said is that you have kind of a little bit of a cap rate buffer almost, all kind of. Is that fair?
Sure. Yeah, I think so. I mean, again, you look at where these things have been trading, whether it's a horizontal apartment deal or a build to rent deal, and I try to create some level of distinction, but the cap rates are the same. And so if they're as low as they are today, what really kind of drives them the other way, maybe they grow over the next couple of years, 25 or 50 basis points. If rates really start to rise, maybe it's more. I don't have a great crystal ball. It's pretty cloudy most days, but I like to think we're in pretty good shape again, because we are being pretty thoughtful on the way in as to how we underwrite and what we really look for and from a metric standpoint and ensure that we're achieving. And we kind of always look, not kind of, we always look at everything, in today's environment. If we achieve today's rents at today's costs, what does that deal pencil to? And if we feel comfortable about that deal, we move forward. But we're not trying to get too far ahead of it and really project out, 10 years from now. We try to keep it to kind of today within kind of a 5-year time frame and kind of assess the opportunity that way.
Do you see the BFR as a class sort of segmenting into that class A, B, C kind of categorization that traditional multifamily has?
Yeah, I mean, again, if you want to call it class A, B, or C, or more maybe of the entry level, move up, and luxury, I mean, I think kind of either of those is kind of a fair way to categorize the asset class moving forward. Again, I think it's really driven by location, right? Not all locations are created equal. You're going to be able to get a much different rental rate in Gilbert, Arizona, as you're going to get in Casa Grande, Arizona, at least today, right? And so, and people are going to build to the market and build to what works and pencils from an economic perspective, and that's going to kind of force people to make decisions. And then, again, the kind of segmentation. We know that we're looking at a kind of smaller slice of the pie with 3 and 4 bedroom units. Or homes, as opposed to 1, 2, and 3 bedroom, more apartment style units from a size perspective. But we think there's plenty of demand out there for renters looking to live in a more conventional housing setup, but not necessarily as focused on. We're not necessarily as focused on are we the luxury segment or are we the class A of that? I mean, I think that's where we would kind of, slot ourselves. If you ask me to put it that, we want to be a class A developer. And that really comes back again to the locations, right? So we're going to pay more for really well-located land. We're going to build a bit of a nicer home to kind of meet the design guidelines and requirements if we're in a master plan community. But we feel like there is generally a rent premium that we have achieved for delivering product in those types of communities, in those types of locations.
Do you think it's also beyond location? My gut says the next criteria for that is going to be amenities. I was at the IMN conference a little while ago, and someone there was saying how, it was a BFR operator, I won't say who, but how they don't really need to amenitize. And I can't remember exact wording, but essentially had a pretty short-term kind of outlook. And I remember thinking that it sounds to me like they're building the future Class C BFR community.
And you know what? And there's plenty of demand for people that just want a nice house to live in, and they aren't as focused about the amenities or the resident experience. They want more space. They want more of a home as opposed to the alternative, and they want it to be managed and maintained well. I think there is certainly room for that in the overall asset class. Our take is amenities are pretty critical. The resident experience is pretty critical. Again, maybe those things rank below location and school district for sure for our particular demographic. But not everybody looks for the same things. And that's why, the for sale housing world or apartments, there's, such a broad range of options. I think build to rent really just starts to mirror those other kind of aspects of the, residential housing business. And, I think there is a focus on it today because it's so new and what does or doesn't work. And we've kind of done it all ways. And I think, again, in certain locations, do you need to build a 3,500, square foot pool and a fitness center and, a dog park if you're, 10 minutes from a downtown area, but you're giving somebody a cool 3 or 4 bedroom townhome? Probably not, right? They're trading the amenities for the location. If you're in a more suburban setting, people are going to look to have some more of those amenities or services available to them to accompany the home, right? And so I think that really is what you kind of see. I think the other thing that is maybe more of a concern is, this idea that all you have to do is build a house and put a for rent sign in front of it today and you're in build to rent or whatever, and you're going to probably get, 10 people to lease that home up at whatever rate you put out there. But that doesn't last forever, right? Yeah, and so I think that's where, kind of going back to it, there's going to be that segmentation occurring, and people are going to have to build better product. And also, frankly, because we are kind of lumped all together, my concern is, do we get lumped all together both for the good and the bad? So if somebody builds a more basic community, does that, and it performs perfectly fine, but it's not highly amenitized, or the homes are a little bit more scaled back, does that kind of negatively impact the overall asset class? And it shouldn't. at all, because that's not how we view apartments, or it's not how we view for sale housing. But I think it's going to take some time for municipalities to know that not all, build to rent projects are created equal. And that's a perfectly acceptable outcome. It just needs to be kind of discussed and kind of iterated over time as to, okay, this is a, more of a workforce housing play, or this is more of a luxury build to rent play. And that I think will help with some of that too.
Do you see there being maybe a consolidation here? I mean, how is this space going to change in terms of the players, do you think, over the next few years?
Well, it seems like now, again, kind of everybody's jumping in, from the biggest home builders, some of the SFR REITs developing their own, build to rent channels. And I think like the bigger builders, will see how they kind of go through. We have a great partner in Toll Brothers. They were, early to look to partner with us, and have been, tremendous supporters of their growth, and a real critical, part of that growth. But all the other builders seemingly are getting into it now. Everybody's doing it a little bit of a different way too, right? Whether it is from a product standpoint, or how they're looking to kind of, are they building a 100 home subdivision for rent and just selling it upon completion to an investor that will then own them long term? Or are they building out more of their own, kind of true build to rent team, where they're going to, design the community purpose built for build to rent. They're going to build the homes. They're going to lease it up and manage it, whether it's in-house or with a third party manager. So again, a lot of, I think, still to be determined from like the kind of the investment strategies certain groups employ. And we'll see how long that kind of takes to kind of play out. But then you've got all the smaller players too, right? Like going and buying a 15 or 25 acre site and putting a build to rent community on it. Again, whether it's horizontal apartments or townhomes or more conventional product, it is not rocket science. And so I think right now, again, there's this mad dash to kind of get into the space and become a build to rent developer or operator. But again, I think we'll start to see that kind of settle down over the next few years. And you'll see kind of, there'll be that, again, just like home building, there'll be the local players that have picked one market and they do a handful of projects, or the regional players. There's going to be the big publics that, are volume driven, are going to try to pump out as many rental homes as possible. And then there's going to be everybody in between. And BB Living, again, we're looking to kind of differentiate ourselves from the locations and the product that we offer. And that's our strategy as of today, but that could change down the road too, because it's so new. We're all still trying to figure this out as we go, which is kind of the exciting part of it too.
Yeah, I think that's a good point too, by the way, that, you keep on hearing about a lot of the private builders, especially small private builders, are disadvantaged with respect to capital and access to capital and cost of capital, et cetera. But you know what? There's still thousands of small private builders out there,
right?
And they're thriving, or a little dicier for them often because of those reasons, but they're still doing great and they're still out there.
Sure. Well, and I think that's another part of this too, is like access to capital. There's a ton of capital today in the equity side. Debt is more readily available today than it was early on for us. That's always been a bit of a limiting factor, but we'll see how that continues to evolve. But that's the thing, is these projects do take time. They are you're educating municipalities, you're educating the market. Yeah. And then you've got to kind of figure out, as much as, like I said, putting a for rent sign in front of a new home and it's leased up in a day or whatever, that's the current environment. We are going to go through and take our lumps as an asset class. And we're all going to have to figure out how to continually kind of tweak and improve the operation. I think we do a pretty good job of it at BB Living. We also had the head start. And so that's where we're trying to continue to take advantage of our kind of first mover advantage, or kind of our place in the order. But we're going to continue to have to improve and figure out things as we go forward too.
You're perfect for this question. We're hearing rumors and anecdotes that a lot of cities are being very leery. They're being very, very circumspect about BFR, and they don't fully understand it. Even moratoriums. Are you seeing that? And when you're going out into new markets?
Sure. Well, again, there's just that overall stigma about rental product, right? And it's unfortunate. We feel like, again, we can counter it with some pretty good empirical evidence, statistics, information. It does not bring down housing values to the surrounding residents, all those things that we all know kind of intuitively, but are always kind of brought up. I think municipalities, unfortunately, are taking the stance in some locations where it's like, okay, just this only works if there's like, real issues with the site and nobody else would want to build something there. Then we'll approve a build to rent project. Or frankly, why does it matter if the housing that is being built is for sale or for rent? Like, it doesn't really change the fact that it's adding supply to the market. If it's done well, it's to code, there really shouldn't be much of an issue as to how it's owned. If it's 150 homes owned by one person or 150 homes owned by 150 people, that just seems like a kind of a maybe too big. I mean, maybe that's getting down into the inherent property rights conversation, and we don't need to go there. But I think these municipalities are scared that there's going to be too much of this stuff and it's not going to be done well. But again, there's a broad array of housing that is built every day in this country, all across the country. Entitlements are getting harder to get. I think we just have to be thoughtful about what we're building and planning. And I think we need to work with these municipalities to understand that this is a viable long-term alternative product, and it comes in many shapes and sizes and forms, and that they shouldn't just kind of blatantly say, no build to rent, or, whatever it is, because they wouldn't say no for sale housing or no apartments necessarily. I mean, I know there's municipalities that are more difficult than others to deal with just kind of in general. But the idea that there'd be these like kind of broader moratoriums on it, I think is a bit concerning, and will just be another headwind we have to deal with. But I think it really is overcome through education and time with these municipalities, explain them to how it works. There are some complexities to it, right? We build a very conventional home, but we're also willing to build it on a single tax parcel, just like a multifamily community, which throws the planners and the city work staff for a loop. If, wait a minute, they don't have lot lines. How does this all work? What's the, what do you have to do from a fire perspective, or how are you running your utilities? These are at slightly higher densities than typical. That complicates utilities, setbacks, all of those things. And so again, I think it's just where you have to be pretty thoughtful and do a lot of that legwork up front with the municipality where you're looking to acquire land and develop a community, and just make sure you know what you're doing, right? I mean, you got to figure it out, and we don't always have the answers, but we do spend a lot of time on the front end, especially when we're going into a new market, working, whether it's with the developer initially that may have the good relationship with the municipality, or the municipality directly, to really tell them who we are, what we're doing at BB Living, what may separate us from others that they have seen come through the door talking about build to rent, and really try to kind of distinguish ourselves a bit, but then also educate them as to what the product is, why we think it's going to be successful, and the things that we're willing to do to play ball with them, right? Like, you're not going to get a municipality to bend to your whim. It just doesn't happen, right? I mean, we've learned that lesson. We've kicked a lot of stones, and I've got the sub toes to prove, like, some municipalities just aren't going to bend on some of their rules and standards just because we want them to, right? It just doesn't work that way.
They'll get there, especially in the big picture. There's no doubt they'll get there. It's just very unfamiliar to them right now.
Yes. Yeah.
Branden, this has been great. You've been tremendous, but I'm going to end this with not letting you off the hot seat and answering one of the most controversial topics in BFR right now, the battle of the acronyms. Are we going to go BFR, BTR, or B numeral 4R? Go.
I think we need some serious marketing dollars to come up with a much better acronym and maybe overall asset class descriptor. So I'll plead the fifth on this one, or take the fifth, because I think that's somebody brought that up. I was doing a virtual ULI council the other day, and somebody asked if we could come up with a better name for it than build to rent or build for rent. And I certainly agree. I'm not a marketing person, so I would be the wrong person to ask as to what we should call it. But I think build to rent's easy. But again, I think we got to continue to work to educate the industry at large. Yeah. That's a very broad term, and it's just like saying housing, right? And so if we're gonna, maybe we can go from that. So.
I kind of like the build numeral 4. That's rent. That's kind of growing on me now. It just looks, it's more interesting.
Yeah.
Branden, I thank you so much. This has been tremendous. This has been very, very eye-opening, and also just a real good education in the dollars and cents of BFR and where we're heading.
Hey, well, thank you for having me. I'm really excited to participate in the podcast today. We certainly love what we're doing over here at BB Living, and we're excited to be part of this, growing industry, whatever we want to call it. We're excited to have our place in it, and really excited about the future for the business. So,
yeah, us too. Thank you so much. This is Dean Worley with the New Home Insights podcast. See you next time.